Sup, freaks? It's your boy Marty Bent here to introduce this episode of Tales from the Crypt. I had the immense pleasure of sitting down with Andy Edstrom, author of Why Buy Bitcoin. Incredible conversation, getting to know Andy a little bit more, talking about his book, a recent presentation he gave at the Value of Bitcoin conference, and Bitcoin from an institutional investor's perspective. I think you guys are really going to like this one. This episode is brought to you by our good friends at the Cash App. You freaks should already know all about them, but if you don't know about them, let me tell you a little bit about them. They're helping you stack sats. They're helping you send sats. They're helping you receive sats. They're helping you DCA into sats, all right? We're not buying fractions of Bitcoins anymore. We're buying whole sats. Cash App makes that extremely easy. If you want to set it and forget it, you can do that. Daily, weekly, bi-weekly buys on the app. You can set it up as much as you want. Or up to the limits. Excuse me. So they got that. Sats are the standard. I've made sats the standard again. So it feels more empowering buying whole sats instead of fractions of Bitcoins. On top of the sat stacking, sending, receiving, and selling, if you so please, they have Cash App Investing, which allows you to buy slivers of stonks. I know a lot of you freaks don't want to buy stonks. The stonk market's been a little bit crazy lately. It's been taken over by people like Davey Day Trader. It's madness out there. The suits are losing. The inmates are taking over the asylum. And if you want to take apart and just buy some slivers of stonks, Cash App's letting you do that. You don't have to, but it is available. You can, if your favorite stonk's a little too expensive, out of your price range, you can buy as little as $1. Because it's directly connected to your bank account, there's no 4 to 5 day waiting periods. On top of that, it may even be your bank account. Cash App's becoming like a new wave bank. They've got account number and routing numbers. You can direct deposit your paycheck into the Cash App. Cut the banks out. You can use Cash App as your bank now. They've also got their Boost program, where you save at partner merchants when you get your Boost card, your personalized Boost card. The app is just expanding. I saw they just bought a company in Spain the other day. Maybe they'll be expanding internationally from here. I don't know. Not part of the ad read. Didn't talk to those freaks over at the Cash App about this, so don't take my word for it. When you do download the Cash App, make sure you use the code STACKINGSATS. That's one word, STACKINGSATS. You're going to get $10, and $10 is going to go to our good friends at Owls Lacrosse. That's Owls Lacrosse. Use the code STACKINGSATS. Download the Cash App and enjoy this trip with Andy Edstrom. Okay.
You've had a dynamic where money's become freer than free.
If you talk about a Fed just gone nuts, all the central banks going nuts.
So it's all acting like safe haven.
I believe that in a world where central bankers are tripping over themselves to devalue their currency, Bitcoin wins. In the world of fiat currencies, Bitcoin is the victor.
I mean, that's part of the bull case for Bitcoin.
If you're not paying attention, you probably should be.
What is up, freaks? Welcome back to Tales from the Crypt. It's your boy Marty Bent here on a lovely Monday afternoon. The sun is shining, the birds are chirping, the weather's heating up, but we're here to talk about Bitcoin. Very excited for this conversation. Long time coming. We've been conversing back and forth for a while now. I'm going to raise my hand here. The lagging has been on my end to get this conversation in the books, but I'm happy that we're finally getting done. I'm sitting down with author of Why Buy Bitcoin, Investing Today in the Money of Tomorrow. I'd like to introduce you freaks to Andy Edstrom. Andy, welcome to the podcast.
Marty, it's a real pleasure to be on. I'm super psyched to be here, and no worries about chasing you down. We've made this happen, and it's going to be great.
It's going to be great, yeah. So we met in person last year at Bitcoin 2019 at a little picnic bench with Bitcoin Tina. And you had a draft of your book out. I'd read about half of it, I believe, at that point. Have since finished it, at least that draft. I have not gotten the hard copy yet. But very interested to walk through why you wrote the book, what's in the book. But first, before we get into that, I think it's important to understand what you were doing before the book, and your sort of career path that led you to Bitcoin and writing this particular book.
Yeah, man, happy to tell my story. And before we start, I'll just say that you're in the acknowledgments of the book. I appreciated the positive feedback you gave me. It was a pick me up at the time, because it's easy to start a book, it's harder to finish it. But it was awesome to have some good feedback from you at the time. And honestly, your pod and the Bent, of course, were significant factors in me making my hero's journey from Bitcoin through all the alts and the desert of shitcoins and back to Bitcoin. So my story, I did work for Goldman. Basically, I graduated college in 2003, and I worked for Goldman from 2004 to 2006. And I've spent 17 years basically in the regular way finance and investment business. And I did my undergrad in economics, and it didn't prepare me, of course, at all for Bitcoin, right? I was a Keynesian, taught Keynesian economics, inculcated just like everyone else. And I had no exposure to the Austrian economics, other than I'd probably heard of Hayek, once or twice, but never studied anything. And so I managed to basically, make my way well into a career in finance without ever truly understanding what is money, which is sort of shocking. But it's helped me to appreciate why so many on my side of the fence in legacy finance have struggled with Bitcoin. And it's one of the key reasons I wrote the book. But my career in a nutshell, investment banking, Goldman Sachs, private equity, worked for a fund that spun out of the Carlyle Group, which is a giant private equity complex. Then I worked for a hedge fund here in LA called Tenenbaum Capital, about $5 billion of assets. And I was an associate when I joined and a principal when I left. And I left to join my family business, which is actually my dad and his co-founding partner started a wealth management business, independent registered investment advisor, fiduciary business, over 30 years ago now. So I've been there for 8 years. And I'm one of those third exposure guys when it comes to Bitcoin, okay? So I read about it while I was on vacation with my wife and my son. I was in Eastern Europe. We were traveling, and there was an article in The Economist about Bitcoin. And I read it, and I didn't understand it at all, and I completely forgot about it. Second exposure was an article, I can't remember if it was Economist or Wall Street Journal, and it was on the DAO fork, the Ether hard fork. And I guess that was probably late 2016, maybe July 2016. And again, totally over my head, missed it. And then first quarter to second quarter in 2017, I saw an article somewhere, somebody that I knew pinged me on it. It might've been actually Arun Rao, real smart tech guy that I had known for a while. And, basically said, hey, you got to look at this. And that's when I started to fall down the rabbit hole, do the research. It was nights and weekends, wasn't getting any sleep, the usual, this is too fascinating to put down. And I ended up publishing a research report, in sort of classic investment management / Wall Street style on crypto. And it was, the title was basically Cryptocurrencies, the world's most underowned asset class. And so that was it was probably September 2017. And so, of course, went through the bubble, went through the crash, and I was still convinced of the thesis. But eventually I continued to do the work, and I listened to more Marty Bent and read more Marty Bent. And I finally figured out that Bitcoin was the thing. And we got to beginning of 2019, right? We had the hard fork and the crash at the end of 2018. So Bitcoin was like 3K in January 2019. And finally I realized, okay, this is ridiculous. Like, this is probably the buying opportunity of a lifetime. And I got to get my clients exposure. But if I'm going to get them exposure, then I'm going to have to explain it to them. And it's not a 1 or 2 conversation, kind of topic. So I'm going to have to write it down. So I might as well write it in a full book and put it out there. So I did that. I started writing in January when the price was around 3K, and it was published in September. The draft you read was a little rough. I mean, most of the meat was there, but I reworked it basically to make it a little less technical and more readable, sort of more accessible to the average reader, average intelligent reader, let's say. And so that was kind of the story about how the book came to be.
Well, thank you for writing the book. I mean, the drafts that I read, I'm sorry I've not got my hands on a hard copy yet to read the final version. That is on my list of things to do. The book list gets longer in Bitcoin every year.
It does. It's hard to keep up.
And I mean, a draft I read, again, like you said, you not dumbed it down, but made it a little bit more clear and less technical. I thought it was very, very readable and digestible for an institutional investor type audience. So what has the reception from your clients been to the book, and how's it been sort of educating them about Bitcoin and investing in it from their perspective?
Yeah, look, it's been definitely, overwhelmingly positive, but not without exception. I mean, I still have a couple clients who are either wary of it, or, I guess they don't want it to succeed because of what the implications, might be for the existing system, I think is their driver there. But yeah, overall, a lot of good feedback. The main thing, they've said is it's well written and understandable, which I'm thankful for, that they basically could hopefully wrap their heads around it. So yeah, it's where we were, I think, before the book, at least with my clients, was the usual tropes in the mainstream media, the sensationalism, it's criminal money, it's for money laundering, whatnot. And so we've come a long way since there, but it is an uphill battle. But I have gotten overwhelmingly positive, results and feedback. And that was, the goal that I tell people, because I spoke at the Value of Bitcoin conference last week or the week before. And the message I've been bringing to sort of legacy finance people is, look, if you've got someone that you want to help understand this, or if you haven't done the work yourself, legacy finance person, to understand this, here's a tool that's hopefully readable, but also doesn't sacrifice, too much in terms of detail. I didn't want it to be sort of short and perfunctory, but I also didn't want it to be 300 pages. So it's somewhere in the middle. Yeah.
Somebody is making his way through an 800-page book right now. I appreciate you keeping it somewhere in the middle.
Is it Mises?
Yeah. I'm finally making my way through Human Action.
Yeah. Human Action is a slog. I did it on audio, and the audio that I had is not very high quality. I think it must have been recorded 12 or 15 years ago or something. So it was doubly difficult. But yeah, man, it's worth, as it's worth the effort and worth the work.
Yeah, it is. It's, I'm getting through it. I'm making good strides. I'll wake up, take the morning shift with my son. He takes a nap like an hour and a half after he wakes up at like 8 a.m. Around 8 a.m. So I start reading at like 7:30 to 9.
Yeah, man.
Getting through it. It is a slog.
Like they say, like eating a whale, right? One bite at a time.
Exactly. I'm a slow reader too, so it's going to take many, many bites for me.
Yeah. I got into, there was a short time in my life when I tried to learn, speed reading basically as a technique. And I did it a little bit. And the conclusion I walked away with was, yeah, you can teach yourself to read something very quickly, but your retention, at least for me, the retention of the material was left something to be desired. So my experience personally was there's no free lunch in terms of speed of reading. If you read slower, it takes you a longer time, but hopefully you absorb it better.
Yeah, no, I think that's definitely the case. I find myself going back and rereading lines. I'm one of those people. I was like, I need to really understand so I can keep the thread going in my mind of what's actually happening within the book. So
absolutely,
it'll take me some time. I'm about almost a third of the way through.
The mission of Bitcoin education, in my view, is hit people from all sides, right? Maybe you read my book, maybe you read one of the other books on the market, maybe you listen to TFTC, listen to a couple of the other pods. It takes multiple exposures, repeat exposures, different lenses, different angles for this stuff to sink in.
No, I was actually having a conversation over the weekend with somebody who was asking exactly that, like how writing it for an investor audience, like in a newsletter, like how do I get the point across to them that Bitcoin can help in a certain very specific situation. I was like, you're not going to do it in one newsletter. Like it takes many touch points.
Yeah. Yeah. I love that question. Just explain Bitcoin to me in 2 sentences. What do you do with that? Right.
Yeah. Number go up. Bitcoin fixes this. That's it.
The memes are big. The memes are big. Your partner in crime, Odell, is on top of that too. You guys are a meme machine. So is my newly affiliated firm, Swan Bitcoin. That's key to our business model. Yeah,
getting the message condensed into a very small and reproducible sort of meme format is important. It does work. It does go a long way too, and that's the one thing with Matt. I think Matt has produced more meme material than I in this duo, and that's, I think, what you'll come to realize is like natural. Like he doesn't go out there and be like, "Oh, I'm gonna make a meme." It's just like he just says something, and it just like picks up steam in the background. That's when it becomes a meme, right?
That's right.
Sort of organically, naturally replicated by people who just really connect with it.
Yeah, man, the memes and the narratives are so crucial. One of the guys who's woken me up to this is Ben Hunt, who I know you've had on the pod maybe more than once. I've learned a ton from him. On that topic, and I was lucky enough to meet him. He had an event out here in LA, and he's got a very interesting perspective on basically narrative development. And to my mind, the meme component is crucial to that.
Yeah, right. It just makes all this stuff easy to digest and then share. It's like, all right, that's the meme. Like Bitcoin fixes this. It's like, all right, it's just a basis from which people can take their research. Like if Bitcoin does fix this, how does it do that? And why does it fix this particularly?
Yeah.
You sort of dive into the nitty gritty stuff.
Yeah. And we got to convince Ben to come over into the light.
He still thinks we're all going to get shot. We'll see. Unfortunately, I think Ben particularly will be one of the late adopters who's sort of forced to by the will of the market.
I think he will too. I think he's gonna. I don't know. He was kind enough to invite me to talk about Bitcoin, and I think his planned conference in October, and he'll probably disinvite me after saying this. But I was reading his latest letter, and I almost fell off my chair laughing after the first paragraph, because he describes himself basically as an upper middle class white guy, and if Ben Hunt is upper middle class, then I'm starving on the street. I think one of the key reasons that Ben is not taking the personal risk on Bitcoin, right, is he's got too much to lose. I mean, if you've made tens of millions, maybe hundreds of millions in the legacy financial system, man, it's a lot tougher to come out pro Bitcoin when you've got 2 feet firmly planted in a system that's made you rich.
Right. And incentives and I don't want to say complacency. I don't think maybe Ben is a little complacent. Disclaimer: I love Ben and I love our conversations. Yeah, I know
me too.
Many of you freaks out there who've listened to them disagree, Charlie, and I disagree with him as well. But
look, I've got conflicts of interest. We all do. I prefer to, I try to bubble them up and make them as plain as possible. Nobody's unconflicted in this situation, but yeah.
That's what somebody. I sent a provocative tweet out over the weekend, like journos are some of the worst people on the planet, and I was talking about like corporate press journalists who basically speak the party line and just parrot whatever the party line is at any given point in time. And somebody reached out to me, is like, wouldn't you consider yourself a journalist? Aren't you in that cohort? And I was, number one, no, I don't consider myself a journalist, but I can see how people would view me as such. And then number two, like, I wear my bias on my sleeve. Like, it's set, like Marty's bent, the definition that I have at the bottom is, this is my inclination, this is my bent on everything that's going on, and like, this is my bias basis, what I think is interesting in the last 24 hours, like me.
Yeah, I think you wear it on your sleeve. I think you put it front and center. And there's still, people can learn a lot from you. It is, man, it is hard to think for yourself. I mean, we do live in an age where there's more info than ever streaming at us. And it's, I guess, harder for the individual, or it's more work to try to separate the wheat from the chaff. But that's just the nature of the beast. That's the world we're living in. Yeah, no,
and I think as long as you're upfront with that bias, and I don't even say, maybe it's a conflict of interest, whatever you want to call it. I think that's a lot more admirable than the corporate press, who pretends like they're feeding you facts and is not objective on any particular subject, when they are heavily influenced by their objectivity, and their facts aren't always ironclad. I think that's less admirable.
Yep. Agreed. I try to read as much history. I've actually been reading more history lately, partly because I've got an Audible subscription, which has basically some of the credits like expire. Like if you don't use them up, they basically go away. So I had like 10 credits that were about to expire. I was like, oh shit, I got to buy a bunch of books. So I got I bought a bunch of books, some history, some econ, some other stuff. But yeah, it makes you wonder. Like, I wish I could just have experienced different periods in the last century, even just in the US, to really get a true sense of how unbiased the journalism was at the time. I mean, you read about the yellow journalism, period, a century plus ago. And at that time, William Randolph Hearst, I mean, what I read in history class, what they taught me in history class was like totally ridiculous, biased journalism at the time. And then I guess it became less biased over time. And now we're going through a period where it's more biased because the business model was changing. And it just makes you wonder, how was there ever a moment when journalism in general was unbiased? And I think the answer is never 100%. It's just gradations.
Yeah, no, it's what I was typing to pull up a thread of tweets I sent out in January, because I was reading some history too, particularly about Thomas Jefferson. I forget. I was like reading Thomas Jefferson's letters or something like that. And
hey, good for you.
He has 2 letters, 3 years apart, 1809 and 1812. And the first, he had this line: "I shall give over reading newspapers. They are so false and so intemperate that they disturb tranquility without giving information." And then 3 years later, he sort of followed up on that. He said, "I'd given up newspapers in exchange for Tacitus, Thucydides, for Newton and Euclid, and I find myself much the happier." So sort of reading more about history and philosophy over the daily news of the time seems to be something that's has a much higher return on investment than getting caught up in the media cycles at any point in time, like you said. So this was Thomas Jefferson.
It's true.
200 years ago.
It's true. I'm guilty of the same. I mean, our influencer, our North Star, Nassim Taleb, is constantly banging on about, read the classics, read the ancients, read the old guys, because so much of human nature has been determined for thousands of years, and we'd all do well to remember that.
No, I agree. I completely agree. And that's sort of why I've been turning, like, I finally decided to read Human Action. It's like, all right, let's just do it. This is a book that's been around for decades now at this point. It seems to be something that could stand the test of time centuries into the future. And getting away from today's social media and mainstream media nonsense, particularly the last month, is something I think is actually good for mental health. Like, my wife has been getting a little distraught, like following social media, everything that's going on, all the pressures to post certain things and posture certain ways, it really starts fucking with people's minds.
Yeah, man. I mean, it's been a tough couple of months. I mean, I'm in the wealth management business, right? So I'm tasked with looking after people's investments. March was pretty hair raising. April was a little bit better. We've had this amazing rally back, not quite to the highs. Well, I guess to the highs, on the NASDAQ. Basically, the tech giants are back in fine fettle. But yeah, it was. It's been. I agree. I felt the stress. I've been watching the activities with the protests and the riots. I saw a video of rioting going on the Third Street Promenade it wasn't rioting. It was looting, basically. A few days ago. That's 6 blocks from where my old apartment was, and it's you gotta moderate that fire hose of stressful imagery that gets pumped into your eyeballs if you let it.
Yeah, and I mean, it's completely just used to manipulate emotions and at the end of the day manipulate action. And once you realize that, it makes it easier to turn to older books and philosophy.
Equanimity from the ancients. I need to do more of it myself.
Yeah, it's a goal this summer. I say all this, but I'm addicted to Twitter. Like, I'm still on it multiple hours a day.
Look, let's be real. If you've got a product or you've got a perspective about Bitcoin, you got to be on Twitter, right? By the way, the last couple months, I kind of fell off of Twitter. I basically stopped tweeting for about 6 weeks. And the reason I did that, honestly, was I just had too much going on, managing my clients' portfolios. I had to focus on that, first and foremost, and not get distracted. But yeah, it's hard to get a message out without Twitter, man. So as long as I guess the thing one could do is say what you got to say, tweet what you got to tweet, and maybe not read everything in the feed, but
yeah, try to filter out as much as possible. That's been my goal.
It's hard, man. Those geniuses working for Dorsey have figured out how to capture as much of our attention as possible.
Yeah, and well, that's why I recommend TweetDeck. TweetDeck is really sort of an unbastardized version of Twitter. So if you know how to use list and group people into list and about topics that you want to follow, it's sort of an undeprecated version of Twitter that the algos haven't attacked yet. So word to the wise, if you're not using TweetDeck yet, I highly recommend it.
All right, I need to get on it.
Yeah. Speaking of getting on it, let's get on why we should invest in Bitcoin. You mentioned the presentation that you gave at the Value Bitcoin conference last week, and we were talking about transitions. We're in a transitionary period, and I really like the first slide of your presentation, which describes the fact that we're going to probably witness an economic showdown, a showdown of economic thoughts, one that has dominated the last century, which has been Keynesianism, and another that will probably resurge back into the mainstream and into the psyche of the masses, which is Austrian economics, or the Mises view of the world. What's going on here?
Yeah, man, there's so much. I'll try to distill it. Look, I was raised Keynesian, so I had the Keynesian goggles on from day one. And Keynes was technically brilliant, and he had a lot of great ideas, sort of like, Karl Marx and Friedrich Engels, great idea. Communism, super idea. I love the idea. And the devil, of course, is in the details, which is to say, because of the way the actual world works, the system doesn't work at all. Now, Keynesian management of an economy is not as bad as, the allegory with communism, but it's still pretty bad. I mean, it depends on the notion of stimulating when the economy is weak. So print money and run deficits. And then, of course, you got to do the opposite when the economy is strong. And that second part is the hard part that doesn't happen because, as we know, politicians are elected on 2, 4, and 6 year cycles. So they just, they deliver the goods, they deliver the pork, because if they didn't, they, would probably be voted out of office for the most part. And so we get the accumulation of debt. And that's the biggest piece, to my mind, is the debt story. You look at the last century, and debt to GDP, it went up and down in the first part of the century. Obviously, it went up with World War II, but the levels were still at manageable levels. And we had this productivity explosion basically after that event. And then we were on Bretton Woods for 27 years and debt to GDP stayed flat. And then, of course, 1971 comes around and we're off the gold standard. And that's where things go sideways, so to speak. I think did you guys have the WTF happen in 1971 guys on? Did you have Mr. Cool BP and Heavenly Armed Clown?
Yeah, we had them on.
Yeah,
had them on a couple of weeks ago. That was a great episode.
That was a great episode. Those guys are great. I did the first pod that I did actually was Colin. He read my book and he got me into the pod scene, so I thank him for that. But yeah, a lot of bad stuff a lot of things have changed for the worse since 1971, but obviously debt has been the big one. So debt to GDP went from about 145% to now call it 350%, right? 2.5x or 2.25x. And that's the problem we have to deal with. We quote unquote, as a society, have lived beyond our means for call it 50 years now. And that's the biggest piece. So the Keynesian system has gotten us into this mess, and now we can't have a recession, right? Recessions are illegal. If the central bankers and if Congress allowed us to have a recession and clear out the dead wood, it would be a depression. So they can't let that happen, but you can only kick the can so far, and we don't know how long the can be kicked. You look at Japan. Japan has extremely high debt levels. I had this debate with my partners, with my colleagues on a regular basis. They point at Japan and they say, look, you can have tons of debt and still the thing, continues on. And my response to that is, yeah, that's true. But once everybody is pushing debt levels, government debt levels, let's say of 200 to 250% to 300% plus, and total debt levels, including consumer debt and corporate debt, in excess of those levels, then at some point there's going to be a change in perspective or a change in psychology. And this gets to the issue of inflation. Inflation, we have to first admit, is not all that well understood. I mean, there are many, many economists that have very fancy models that would like to tell us exactly how it's going to go. The reality is we don't really know, because there is that psychological element. The story of inflation in recent years has been that, yes, the banks have printed a bunch of money, but velocity is still low, right? A lot of those dollars are sitting on bank balance sheets, or they're sitting in people's bank accounts. And until people start pushing those dollars and banks start pushing those dollars out of their accounts, inflation is going to be low. Well, the problem is it's really hard to tell in advance. It's really hard to predict when human psychology changes. Here again, credit to Ben Hunt. One of his ideas, I'm not sure if it's his original idea, but he definitely popularized it, is this idea of common knowledge, right? It's not what I know and what you know. It's not what everybody knows. It's what everyone knows that everyone knows. It's that moment in time where people are looking around and they're seeing, oh, trillions of dollars are being printed. And oh, the currency's, being debased. And at some point there's sort of a tipping point, right? And then you get the cascade of change in human behavior. The velocity goes up, and then you end up with an inflationary situation. So those are the things that I'm watching and thinking about, and I can go into more depth. But getting to your question of Mises versus Keynes, it's been a Keynesian world for the last century, but I think Mises will have his revenge.
I do as well, and I'm just looking at the charts that you have on the second slide here, page 3, and just like you're just looking at like the 10-year yield curve, or the history of the yield of the 10-year Treasury note. Like it does not look like a good chart. It is trending in one direction, that's towards zero, and so when it gets there, it's basically saying that the a 10-year investment in the United States will yield you no return. And that's the trend that this chart particularly is going in, and many others, other durations, whether it be 10-year, 30-year, 5-year, look the same way.
And that's the way everything gets, every investment asset, well, almost every investment asset gets benchmarked. People say, well, if the 10-year, treasury is yielding 5%, which it did many years ago, I'm going to demand a 10% annualized return to hold stocks. I should say stocks. But if the 10 years at 0, well, maybe I only demand 5% annualized return from stocks. And that helps tell the story of why valuations are at near record levels, right? Multiples of earnings, multiples of cash flow. The valuations are really high because people are willing to bid up stocks to make that, call it 5% annualized return because, it's better than they can do in treasuries. And most of them still haven't figured out the opportunity in Bitcoin.
Right. It is crazy that Bitcoin sits there, it still gets derided, yet all this madness is still going on in the world. And so before we get in Bitcoin, I want to stay on this topic, the US dollar, and whether or not it's truly being debased at a rate that is uncontrollable into the future. Going back to Japan, people love to point at that, it's okay. But if you look at the underlying state of their society, they have the lowest birth rate in the world. It's under 1, I believe, at this point.
Yes.
Studies have come out and asking people why aren't you having children or more than one child, and 89% of some of the surveys that I've seen respond that it's economic. So even though the Nike may be at a maybe performing well, and inflation, quote unquote inflation, reported inflation isn't extremely high according to the indices that the central banks will put in front of you. It seems like if you look at the underlying society, it would paint a different picture, and that's coming here to the United States. We had our lowest recorded birth rate on record just announced a few weeks ago, in over 110 years since that's been recorded. I haven't seen any surveys asking why that birth rate has fallen here in America particularly, but I would assume money is a big factor in people's delaying of family formation, or just ditching of family formation at all. Probably coupled with cultural things, like people being more selfish these days, and having more wanderlust, wanting to travel over start a family. Probably a combination of things. But then, I wrote about it in the Bend, there's this huge, and this is the Keynesian mindset, huge delusion of the collective we, that public debt doesn't matter because it's only money we owe ourselves.
Paul Krugman. Debt is money we owe ourselves. I love that one. Ugh.
Well, it doesn't make... Well, and that's I got in a fight with Joe Weisenthal about it over the weekend, and then this morning I was still thinking about it, decided to write about it. I was still thinking about the tweet exchange we had on Saturday. I was like, this doesn't make any sense, because they'll say QE is a net zero effect because it's just Fed buying treasuries, and it net zero on both balance sheets, on the bank's balance sheets and the Fed's balance sheet. But that's
here
really misrepresenting what's going on.
I'm going to say something which is going to piss some people off, and I'm not going to name names because I don't want to throw anyone under the bus, but I had this debate with one of my family members. I actually sent an email out a couple months ago, and the discussion, or basically the question I was asking was, is it worth it? Is, the lockdowns, is the deficit spending, is the money printing worth it? And the way I framed it was, what was the bad case scenario, for lives lost due to COVID in the US? Probably a couple million, let's say, right? I mean, it's been, I don't know, what has it been, 100,000 or whatever. But let's say if we'd done, nothing, 2 million people would have died. Okay. Or even 3 million. Let's say it was going to be really bad. Well, what did we spend to avoid, that loss of life? Well, we spent 3 trillion or more. Okay. What does that amount to? Well, rough math comes to $1 million a life. And so the question, is that worth it? And the answer is, well, depends on to whom, right? Did you bring your checkbook, Marty? Are you ready? You ready to write a check for $1 million? And this particular family member, his retort was, "Oh no, you've got this all wrong. In the bailout package, in the deficit spending package, the CARES Act, excuse me, they're only spending whatever." He said they're only spending 150 billion or something on healthcare. So that was his lens he was viewing it. By the way, he happens to be a boomer. His lens was that, they're only spending a few hundred billion on healthcare. And of course, the answer is no, you're incurring all this debt that the older generations won't have to pay for because they'll be gone when the bill comes due. And you've saddled it, all onto the younger generation. This concept is one that I have to, tread carefully around, because I have lots of clients that are boomers and they don't want to hear this. But boomers and older, right? Silent generation too. They got the best deal. It's a misunderstood problem. This concept that, there's nobody that's going to have to pay for this debt we're incurring today, number one, or number two, that it's this, net zero transfer, is extremely misguided.
Yeah, the net zero stuff is the thing that pisses me off, because you either have to be ignorant, incompetent, or malicious to trot that line out, particularly because it's not net zero. The Fed gets the treasuries, and then they become unproductive assets on its balance sheet, and it gives the banks dollars. That transaction's net zero. Yes, they're getting equal amount of the banks are getting equal amount of dollars to the treasuries that they hand over to the Fed. Those dollars are then being levered in the system, which creates crazy inequality, and they're being levered in financial assets, which affords the owners of those assets undue benefits. It doesn't make any sense. Like, to say that's net zero is being completely disingenuous. Like, it's insane.
It is. Many of my clients do not understand that they have lived out their lives during this period of just ongoing debt incurrence, and they think that it was all their hard work and brilliance that made them wealthy, and it was partly that, but it was also partly just living through this period of borrowing, basically juicing the economy with the expectation that some future generation will pay it back. And it's really hard for people, to understand, or they just don't want to understand it. I'll say one thing which has dual meaning. So first, There Will Be Blood. You know this movie. I think have you talked about it on the pod?
We've brought it up. I'll drink your milkshake has come up.
Yeah, exactly. I'll drink your milkshake. So There Will Be Blood. Remember that, because I think if we don't get the debt problem solved, there actually will be blood. But the movie, is based on a novel called Oil, which was written by Upton Sinclair. And Upton Sinclair, wrote several famous books, and he was a very quotable guy. But my favorite quote of his is, "It's difficult to get a man to understand something when his salary depends on not understanding it," right? And in one way, the older generation's quote unquote salary, Social Security, entitlements, all this unfunded liabilities, depends on not understanding this debt problem. And likewise, when you look at the legacy, financial system, this is part of my mission these days, right? Educating basically wealth managers, bankers, et cetera, about Bitcoin. Their salary also depends on them not understanding it. This, I think, helps partly explain why it has taken so long for these people to figure it out. They have the opposite incentive, and man, you get the blinders on. It's really hard to see the truth when you've got your livelihood depending on something different.
Yeah, especially if you're sitting comfy with that 2 and 20. It's hard to justify 2 and 20 for Bitcoin when it's a bearer asset you should probably hold, and there's not really too much active management needed to invest wisely in Bitcoin specifically.
Yeah. And this was part of my, personal journey. Was, like I said, I wrote that research report in 2017. And my view at the time was, I don't know who's going to win, so I'm going to hold a basket, basically, hold a portfolio, and Bitcoin will always be, I shouldn't say will always, but Bitcoin should be the largest part of the portfolio, but I want to own all this other stuff because, I don't know what's going to succeed. And now when I look at the investment thesis today, and likewise over the last, 3 months, 6 months, year and a half, it's pretty clear to me that Bitcoin is the thing, right? Hard money assets are the thing. And, will there be, I hate to say it, like, will there be another, altcoin bull market? Sadly, there probably will be. I tend to be in the same boat as Corey Clipston. He's like, look, even if it's a fraction in percentage of the last one, well, if the magnitude of Bitcoin gets where we think it will, then that'll still be huge absolute dollars. I could say the same for gold, by the way. This is here I'm going to get some more flack from from the freaks out there. I think gold makes more money, accumulates or accrues more value in the next few years than Bitcoin, just because it's so much bigger, right? If gold is a $10 trillion asset, or let's say the monetary premium embedded in gold is 6 or 7 trillion, and it accumulates 5 trillion of value, right? So gold goes to whatever 2,500 an ounce. It's at 1,700 now. Do I think that Bitcoin's going to accumulate 5 trillion of value in the next 4 years? Yeah, I might. I think it's going to take longer than that. But yeah, hard money assets are probably an important thing to own. This, for our clients, for my clients, is basically it didn't used to be. It's now a new sort of discrete category on its own. And it's Bitcoin and it's gold. And with the money printer going, brrr, you're going to want to own those hard money assets, right?
I mean, yeah, I think that's why we're both here. And so I guess this is a good question while we're on this topic, as somebody who's advising clients on allocating a portion of their investable funds into Bitcoin. How much into Bitcoin? Like, there's obviously going to be a transitionary period.
Yes.
Stocks can go up for quite some time if Fed manipulation persists the way it has for the last 10 years, 10 years specifically. I know I just said you shouldn't actively manage Bitcoin positions, but how do you sort of transition into this, and how are you advising your clients on doing that?
Yeah, a couple things there. So I tweeted, I think last week, something along the lines of, in March when I was buying stonks, Bitcoiners thought I was crazy. And when I was buying Bitcoin in March, my stock investors and stock clients thought I was crazy, right? Both sides thought buying the other asset was nuts. I can definitely create a scenario or imagine a scenario where, as you suggest, there's just so much money printing that basically every asset goes up. So then the question is, well, what goes up more? Or, do you get debasement of purchasing power such that actually you're only, treading water or even losing net value in certain assets versus others? I do think that the hard money portion of an investment portfolio is really important. And we can talk more about inflation, we probably should, but I don't know when it's going to hit, although I don't think it's going to take, it's not going to take 10 years. When I published the book, I told people basically, I think we're going to see inflation within a decade. That was before COVID. Now I don't think it's going to take a decade, right? So we'll see how that goes. But as far as portfolio sizing is concerned, it's hard not to be long stocks, and we're still long stocks. And this face ripping rally has so far paid off in that regard. Not as much as Bitcoin, though, at least year to date, or as gold. And Bitcoin is the outperformer so far in 2020, and I'm very bullish on Bitcoin. So I want that allocation to grow as a component of the portfolio. Now we've started small. We're greater than zero, but it's still a very small percentage. And I won't sort of give specific numbers because it varies a little bit client to client. But I would like to see us add to the position with time. I expect to see the portfolio allocation to increase just as a result of Bitcoin, beating the market, right? Beating stocks, beating basically everything else in terms of price appreciation. But I also would like to be accumulating over time, for the rest of this year, into next year, because I used to be very skeptical of the, sort of 4-year cycle, stock to flow model, sort of periodic repeat around the halving. And yet it seems to be playing out again, right? Every day that goes by and I see what the chart looks like, it seems to be more likely that history will repeat in that regard. And if it does, then we could have a huge bull market, through the end of this year and into next year. And man, you want as an investor, you want exposure to that.
Yeah. Right. I'm thinking of like when I worked at the managed futures fund, we were fighting for like 5% of people's portfolios, just as a insurance hedge within a portfolio. Go out, get your stocks, bonds, 5% allocation to managed futures, just in case shit hits the fan. That's one thing I toil over a lot. It's like, when do these asset managers start moving that insurance part of the portfolio allocation from below 10% to maybe between 10 and 20% because of the potential outperformance against the market? Because it does seem like something's got to hit ahead here, but we've been saying this for years too. It's like the goddamn. I feel like in a crazy house.
When's the herd coming? I think obviously Paul Tudor Jones, who runs a $40 billion hedge fund, his going on record being long Bitcoin, that matters. That's one. Two is actually, I think, the hard money thesis. In other words, to my mind, and other people have other opinions, but as the investment case today, digital gold is like the strongest narrative, right? Okay. So then the question is, well, how much gold do you want to own? It may surprise some people to learn that a lot, and I would even probably say the majority of wealth managers still have zero allocation to gold. So if the thesis, or if the investment thesis, let's say, and there's many reasons to own Bitcoin, right? Not just investment, but if the investment thesis is the hardest money ever, well, if I can't even get an allocation to gold into my portfolio as a wealth manager, then how am I going to get Bitcoin, basically? Well, and you could argue, well, Bitcoin is better than gold, and I think that's true, but it is, sort of a farther bridge. It's a farther leap. So yeah, I think that the hard money thesis becoming more mainstream as the money keeps getting printed, the fiat keeps getting printed, is going to be a significant driver for the Bitcoin investment thesis as far as institutional money is concerned.
No, I agree. And like we were talking before we hit record about Dave Portnoy and Shroot Bucks, and you have that, him like being a huge personality, sort of calling that out was a huge cultural event for me personally. Like I noted it in the bent. And on top of that, you have a bunch of people in these protests. Like, why do we pay taxes if the Fed can just print money? It seems like culturally, at least, from what I'm observing, it seems that a tide seems to be turning, and people are beginning to question the efficacy of the U.S. dollar and Fed policy more aggressively now. Like people you wouldn't expect to in the past. When I was working at Barstool, if you would have told me that Dave Portnoy would be calling out Fed policy in early 2020, I would be like, what the fuck is going on?
It's true, man. There's signs and signals. And I have to believe that the average person out there, and as you know, there isn't, it's sort of silly in some ways to think about the quote unquote average person. It's really more about, how many get red pilled, in sequence. Some percentage of the population starts to question, as you say, wait, why do I pay taxes if they can just print the money? What does this all mean? And then you've got, as you say, mainstream, guys, big audiences basically talking about this stuff, as well as just the growth of your audience and other people's audiences, right? That's also an indicator. The more people listening to Marty Bent and various other podcasters out there is more exposure. So time is our friend. And another way to look at it too, I was talking to someone recently about sort of inverting it, which is, if we get to this time next year, or, basically 12 months from now or 18 months from now, and Bitcoin price hasn't moved significantly higher, you know, I may start to question the hard money thesis. Let's just put it that way. I'll start to wonder if not if I was wrong. Well, I will start to, let's see if my conviction will be a little bit shaken.
Yeah, well, it's a good transition to further into your presentation is what would make a hard money thesis appealing. And obviously that is real inflation in the real world. And you have a slide titled The Gathering Inflation Storm. You break it down into three sections of time, 2001 to 2016, 2016 to 2019, and then 2020 to 2030. First, why these particular time periods, and then we'll go through the factors of deflation and inflation on this chart.
Yeah, no, that sounds great. I'm happy to do it. And this, I think, folds into, you know, sort of the Jeff Booth technological deflation thesis. I know you had him on the pod. I think his book's great too. I really like the thought process he brings to it. And this is, it's made basically one of the major inputs here. So big picture, I like, since we were talking about Mises before, I like Mises's framework of three major categories of goods in the economy. Okay. There is consumption goods, right? That's stuff we consume every day, food, clothing, etc. There's capital goods. That is the means of production by which we make either the consumption goods, or more capital goods to make consumption goods. And then there's the monetary good. That's money. And this is admittedly a simple or simplistic framework, but I think it basically works. So you print more of the money, right? And then it flows into the other two. You create more of the monetary good. Okay, it flows into the capital goods and it flows into the consumption goods. Now, to my mind, the effect on the capital goods is clear, right? You print money, as you were saying, basically markets go up, stocks go up, real estate goes up, and that's like an unambiguous outcome. And you get the Cantillon effect, basically, of the money flowing into these assets as well. Okay. But on the consumption goods side, it's a little trickier. There's multiple factors at work. And this is what we're talking about. This is what most economists are talking about when they're talking about quote unquote inflation. It's really inflation of consumer prices or goods and services for the most part. And so the framework that I've laid out is this sort of several driving factors for consumer price inflation and why it may be different now than it has been recently. So item one is technology. And technology, as Jeff Booth says, is always deflationary. He would probably even make the case that it is accelerating, right? That technology is moving so quickly that deflationary effect of technology is increasing. And I am open to that idea, although I'm not sort of 100% convinced. But let's just say that technology is a deflationary force always. Okay. Then you've got globalization and trade. And you laid out those time periods, 2001 to 2016. Okay. China joined the World Trade Organization, WTO, in 2001. This was hugely deflationary, right? Because basically, hundreds of millions of Chinese workers came onto the world market, and that held down the cost of production of many goods. So that was a deflationary force. That inverted, though, with the election of Donald Trump, and we got protectionism and tariffs. And so the outsourcing of jobs basically from the US to China went into reverse. And what had been a deflationary force became inflationary at the margin, because the cost of production of something and the cost of the good when you slap a tariff on it is increased. But now with the pandemic, looking forward into the next decade, that's into overdrive, right? If there was some doubt about whether it was a good idea to have all our supply chains running through China, that doubt has now gone away, right? It's clear that when you can't even supply yourself with critical, protective equipment and basically medical supplies, pharmaceutical or physical supplies or otherwise, you got something wrong. So now it looks like there's consensus, rare consensus in politics, right? What's one thing that Democrats and Republicans can agree on? Well, there isn't much, but it seems like one is, everything going through China is a problem. So that is now, I would argue, even more inflationary than it had been, since Trump got elected. Okay. Next factor is government stimulus. Now, government stimulus, I'm talking about printing money and deficit spending, has been basically going on for the last 20 years. I mean, through every bubble and downturn, right? You had the dot-com bubble with the internet that popped, and you had stimulus. Then you had the global financial crisis, you had stimulus. And so that's sort of been a constant going on in waves. But now that's, of course, in hyperdrive. I mean, it used to be that we talked about $1 billion here, $1 billion there. Pretty soon it's real money. Now we're talking $1 trillion here, $1 trillion there. So that's got to be at the margin inflationary. Huge stimulus going on right now as a result of the pandemic. And then the last piece, which I think doesn't get enough airtime, is demographics. And there's two things going on. Most people think of the baby boomers as the biggest generation or cohort, basically, in modern American history. But actually, bigger than the boomers is the millennial generation, right? Their kids. And what had happened in recent years was the demographics effect was sort of neutral, in the first part of this century, 2001 and 2016. But then what happened was you had a period where the millennials were joining the workforce. This was incremental labor coming into the workforce, which at the margin is more supply of labor, which keeps wages down, right? More people competing for the same wages. So that was a deflationary factor, which is now reversed because that cohort, right, of which you are a member, basically has joined the workforce. Now we've got what's going on with the boomers, and that is ongoing at the moment. I have clients who are now retiring en masse. That means they're taking their labor out of the labor pool. So that's reducing the supply of labor, which again should be at the margin inflationary, for wages. There should be wage pressure there. So basically, suffice to say that there's several factors here that have sort of flipped in terms of they were either neutral or deflationary in the last 15 years, call it. And now those factors are pushing upward, likely pushing upward in terms of what they mean for inflation. Now, is it going to be inflationary soon? I don't think so. I think we've got this huge negative demand shock from the pandemic. People aren't spending. But I think once that passes, then we'll have to reckon with the possibility that these newly inflationary factors are likely to push up consumer prices and goods prices. And I'll add one more thing to the mix, which is not in the presentation, which is what's going on in the banking system, and specifically interest on excess reserves. When you look at all the money that's gotten pumped into the system by the Fed, a lot of it just ended up on the bank balance sheets. And specifically, it ended up in accounts that the banks just held with the Fed, right? This is the excess reserves beyond what their banks are required to hold at the Fed, basically as safe collateral, the safe base of the monetary system. Well, the Fed had been paying like 2% annualized interest on excess reserves for a period of a couple of years recently. Well, in a low interest rate environment, if you're a bank and you can earn 2% a year, for zero risk to have your money at the Fed, that is truly a quote, risk-free asset, right? The deposit at the Fed, you're going to do that. Well, what's happened recently is they removed the reserve requirements, as you know, and they took the interest on excess reserves, right? The Fed was paying the banks to hold there, and they cut it almost to zero. So now there is a stronger incentive for the banks to push money elsewhere, away from their excess reserve account at the Fed and into the economy. And that should create credit, which effectively, creates money supply with the money multiplier. And so that's another factor that today is at the margin, more likely to increase the money supply and increase or be inflationary, let's say, that wasn't there, very recently, say last year.
Yeah. And so these last two particular factors are what scare me the most. The combination of government stimulus in the form of helicopter money and the Fed also sort of cutting rates and sort of incentivizing credit expansion beyond that. And especially when you lock down, and we're sort of already seeing aspects of inflation, especially meat prices. When you lock everybody down, you airdrop money into their bank accounts and you shut down supply chains, therefore creating scarcer consumable goods. It seems like a perfect storm for inflation in my mind.
Yeah, dude. So I have been mostly, locked down. I haven't left the house much. My wife, God bless her, makes the weekly grocery store trip, right? And yeah, we've got, there's some stuff that's not available. The leafy greens are in short supply. The meat is rationed basically. That you're limited, at least in my neighborhood here in LA. You can only buy one serving of chicken, basically. 2 servings of beef. 1 serving of pork. And yeah, she picked up some steaks because we always make sure we get at least a steak a week. And the price, I can't remember the per pound price, but the couple of small fillets was like $30. And that's certainly way higher than it has been in the past. So there's definitely inflation showing up in certain goods and services for sure. And then, of course, as you know well, the other story of inflation is, the CPI, 42% of the CPI is housing cost. And housing cost, as computed in the CPI, is based on basically a fictional notion of it's. I'm trying to remember the term. It's like owner's equivalent rent. I've got it in the book, but yeah, it's basically the theoretical cost that a homeowner would charge themselves for rent. And as a matter of fact, when you look at the real estate market, so real estate, as you know, is the most levered asset in the economy, right? There is more debt supporting the real estate market than in any other asset. So of course, when you keep interest rates down and you lower them and you lower and you lower them, then your mortgage payment is decreased. And if you are a landlord and you own a property that you rent to people, well, then yes, you can afford to charge less rent if your mortgage cost is low. But of course, the effect of all this is that, a house that used to cost, $200,000 now costs $400,000 or $500,000. And although you may be making the same mortgage payment to support that now more expensive house, right? Because the interest rate is lower, so the same mortgage payment supports more house. The problem is you have to somehow you got to stump up the increase in the down payment, right? I mean, 40 years ago in my neighborhood, yeah, you could buy a house with a down payment of, I don't know, 20, 30 grand probably. And now millennials have to find a way to scrape together $100,000, $200,000, for a down payment for a house in a major city. And it's not so easy to accumulate that amount of capital, when you're starting your career.
Yeah, especially if you have student loans and you want to have a good health care. We've talked about it ad nauseum on this podcast, but the bastardization of the CPI and the fact that it doesn't include many goods like healthcare, education, housing. Well, it has that housing heuristic, but again, that's a heuristic and it doesn't take into consideration the principle that needed, like you just mentioned. It's like, again, like, is it criminal? Is it sheer incompetence? Is it malice? Like, are these, like, is the keep this system afloat at all cost mentality leading people to do truly evil things to represent inflation in this way? Like, it's completely illegitimate and it's a complete lie.
It's a total sham.
To say that
my wife,
people don't have those costs.
Yeah, my wife will tell you that I'm like a pretty even keeled guy, sometimes too much so. But there's not that many things that get me excited or pissed off. But this is like the one thing that gets me pissed off is basically the giant intergenerational theft. And it's more than that, of course. It's also the, like we talked about the Cantillon effects and, the explicit pushing of money and value to financial assets that are owned, only by a few. By the way, this all accrues to the benefit of me and my clients, right? Great news for my, for the investment accounts I manage. Thank you, Federal Reserve, for bailing us out one more time. But yeah, it's corrosive to society ultimately, and I do worry. I do lose sleep about the resolution of it. And this gets into sort of my ethos on Bitcoin. Like, don't get me wrong. If Bitcoin does well, I'll make money. So I got number go up. There's a greed factor. That's real. But I also take the view that the sooner we bring forward, the monetary transition, hopefully the less painful will be the unwind. Because as you know, the longer you kick the can, the longer you keep that heroin addict on the junk, the worse is the ultimate outcome when he has to get off the stuff.
Yeah, I mean, we're saying it play out right now, like with the riots and the protests. Obviously, people are hitting the streets not because of monetary reasons, but I think there's some tangential effects at play here, where it is everybody's rioting for the death of George Floyd, but I think there's an underlying theme of people feeling completely disenfranchised and sort of lashing out at the system. May not all know what is the largest contributor to their strife, to their economic strife, which is central banking. But it seems like people are extremely frustrated and lashing out.
Yes, I agree with that. And I worry about all these factors, and I worry about, I worry about the underlying causes. And I think it's like anything else. There's multiple causes. It's multivariate. But there's no doubt that if you create an environment where many people lose their jobs because because the government, or the local government, state, whatever jurisdiction, makes a decision to shut down the economy and basically force people out of their livelihoods, then you're inviting civil unrest, regardless of the underlying issues of racism and mistreatment of citizens, especially black citizens, by the police. That's very important also. But you just add fuel to the fire when you implement some of these policies.
Yeah, and let's just repeat the one policy said: the government shut down the economy. Like, that statement should never be able to be uttered if we actually live in a truly capitalistic and free society. Like, governments shouldn't be able to shut down whole economies. Yes, I too was freaking out in the beginning. It was for a 2-week shutdown, but after 2 weeks, after 90 days, after we're approaching probably 120 days at this point, the control that the governments have over people being able to weigh the risk of whether or not they should go conduct economic activity is becoming very scary.
So I agree 100%. And my latest thinking, Marty, has been, I'm of two minds, right? One thing that I just keep thinking more about and reading more about and learning more about is, I don't want to say chaos, but just basically the behavior of complex systems and the ability to predict, which is to say we have no ability to predict, what's going to happen in a complex system. And human societies are complex systems and economies are complex systems. So one, angle is, okay, anytime you poke that animal, right? Anytime you try to push it in a certain direction, you're likely to be surprised by what, ultimately happens, right? You're likely you poke the bear, you might be surprised what happens to you. So that's one. And then on the other side, and that basically tells you that you just don't know what the future is and it's impossible to model. And so you should have great humility about trying to manipulate or direct that complex system. And then the other side is, I look at the debt problem, and I read Ray Dalio and I say, how can this not resolve itself basically with inflation? I mean, yes, there's other ways to deal with excess debt. You can have austerity, but that's very difficult. You can have, mass defaults and a depression, but governments won't let that happen. You can have taxation redistribution. I think we'll probably get, some of that. You can have a jubilee, right? You can have debt forgiveness, which is appealing in principle. But if you do too much of it, then people start to say, well, what is contract? What is contract law basically? And the foundation of the economy disappears. So yeah, kind of most roads. Well, financial repression is another option, which we're already seeing, right? We're already seeing interest rates get extremely low. We may even see more capital controls. That's something I'm watching out for. but yeah, all roads lead to inflation. So I'm really of two minds. Part of me says it's got to go in this direction eventually, but then part of me says, I don't know, I don't know what I know. I don't know how to predict civil unrest or what's going to happen with the election, or just where this country's going or where the world's going. It's a humbling time.
It really is. And well, time of opportunity too, right? Like, thank God Bitcoin's here. Hopefully the success continues and more people begin to wake up to the thesis that of Bitcoin and why it may be a good idea to get a hold of some if you can. Because it's to me at least, it's drastically important that we start building systems like Bitcoin and assets like Bitcoin, hard money assets, become more mainstream and popular, because again, it's getting insane.
Yeah, and it seems more and more like the only way out, right? The only likely way out. This is interesting, right? Getting back to sort of the investment thesis, because I had this debate with one of my partners, and he does not believe his position is basically, I'm not willing to hedge against inflation. I'm not willing to position a portfolio, to hedge against inflation, basically until I see the inflation show up, right? Not until I see the whites of their eyes am I going to shoot at them, right? And my perspective is, well, by that time you're going to be paying a lot more for the insurance, right? You're going to be paying $2,500 an ounce for gold, and you're going to be paying $50K for Bitcoin, and so it's unwise to not position yourself in advance of that. And so the slippage, I would imagine, if an inflationary, God forbid, hyperinflationary event were to start occurring, would not be advantageous. Yeah, exactly. I mean, my view is you gotta position yourself soon. You gotta position yourself now. And the thesis is so clear and so asymmetric. Again, in addition, like, the inflation is one thing, and then the trust in government is another thing. This is another debate I have with my partners, which is, let's say, this pandemic was sort of a nothing burger. I mean, look, a lot of people have already died, so it isn't nothing. I mean, it's definitely taken many lives. But let's say that it was significantly overblown, and we're back in a growing economy, and we're back in a bull market soon. I mean, we're already, it looks like, in a bull market, and we can talk about that, but let's say it's all, rainbows and unicorns and everything's coming up daisies. That still doesn't make me feel good about it, what I just went through, right? Because to your point, it's like, wait a minute, we just shut down the entire economy for months at a time, and put, tens of millions of people out of work. And and meanwhile, the government grows, right? Leviathan grows, Goliath grows. And so this is another debate I had with my wife is, she's more, sort of progressive, larger government than I am. And the point I raise with her frequently is, the bigger government gets as a percent of GDP, the more you have at stake when they screw up, right? A small government that screws up badly, relatively speaking, doesn't do as much damage. But when the government is huge, then minor policy screw-ups really have significant effect. And so, I come out on the other side of this saying, well, if it was a big if it's still a big ongoing problem, then, we're in for dark times, right? It's going to be a long recession. And if it turns out that it wasn't so bad, well, then still we just witnessed our government, probably go off the rails and kind of blow it. And neither scenario gives me more confidence in the system. And so every time I lose a little bit of confidence in the system, I transfer a little bit more value into Bitcoin, right? I stack a few more sats. Yeah, I found myself stacking sats every day at this point. Yep. Me too. As you know, I use Swan Bitcoin for that purpose. So there's the shill. Yeah. Got to get the shill in. But beyond the shill, like you mentioned earlier, that you think we're in a bull market. I definitely want to dive into that, and also this slide on Bitcoin's correlation in the context of other risk assets, or correlation with, or with correlation to, or
non-correlation to other risk assets, because that's been a huge meme this year, is that everybody's saying that Bitcoin's moving a lockstep with equities and is sort of driven by Fed policy as well.
Yep.
But Bitcoin does seem to be non-correlated when you actually dive into the numbers and expand your time horizon a bit.
Yeah. Yep. So I agree. And there's a couple ways to look at correlation. So the numbers I lay out in the book are monthly return data, right? And I go back as far as the reasonable or dependable data go back, which is about 2011. Prior to that, Bitcoin's price was below $1, and you probably can't trust the price data. And I correlate it to U.S. stocks, that's the S&P, and foreign developed market stocks, that's the MSCI EFA, and emerging market stocks, and gold and bonds in the form of the Barclays Aggregate Index. So those 5 major asset classes. And yeah, on monthly data, Bitcoin has less than 20% correlation. So it seems to be uncorrelated. The second thing I looked at was, monthly data is nice, but I got to tell you, as an investor, I don't care that much about monthly correlation. What I really care about is when the shit hits the fan, right? When stocks and other risk assets are falling dramatically, then what is the asset doing? And so when I published the book, I think there had been 5 periods. Well, we hadn't had, by the way, a significant bear market in stocks up to that point. I mean, I think we technically maybe had a bear market on the S&P in late 2018, like just barely, but it didn't last very long. So anyway, in those 5 periods, it was 2 of the periods Bitcoin outperformed, 2 of the periods it underperformed, and 1 of the periods it did about the same. And those were the various crises of the last decade, which were, it wasn't the global financial crisis because we didn't have data then, but it was the Euro crisis, and it was the China crisis when they depegged the currency, et cetera. So yeah, it did better in some cases, did worse in other cases. Now, obviously, in the most recent downturn, Bitcoin had that tough day when it tanked, went down more than 50% in March, but it sprang back very quickly. So what does it all mean? Well, what it means is, the correlation, you can talk about correlation in aggregate, or you can talk about correlation conditional on circumstances. So we talked about what happened in March, right? Well, in a scenario where it's just a liquidation, where market participants are panicking and they are selling literally every asset. They're selling stocks, they're selling gold, they're selling Bitcoin, they're selling, liquid real estate, basically anything, then it's going to go down with everything else. So then the question is, well, what does the future hold? And people talk about Bitcoin being negatively correlated or a hedge. I think we're 2 orders of magnitude away from that, right? I think we'll be talking about that when Bitcoin is deep into the 6 figures in terms of dollar price. So will it eventually happen? Yes, if it reaches, Bitcoin reaches its potential, but I don't think we're anywhere near that. And I think in the meantime, it's okay that it's sort of broadly uncorrelated on average, except for in liquidation circumstances where it is correlated. And it is what it is, and that's fine. And we're going to find out, if and when we get inflation, then we're going to really find out if it behaves as a hard money asset. I think it likely will, but yeah, only time will tell.
Only time will tell. I'm optimistic. I think I was thumbing through The Sovereign Individual again over the weekend. I lent my original copy out to a friend and haven't seen it in a couple of years, so I decided to buy a new copy, and it came. And
nice.
Just going back to like page 24 when they predicted that this stuff would come. It has been predicted, like or at least the writing has been on the wall for quite some time that these governments and the sovereign individual, they were focused on emerging market, like Russia and in Asia in the 90s, and it seems that this. That's the word I'm looking for. This, give me a second. I'm gonna get it.
Regime change?
No, it's undisciplined monetary policy has spread from emerging markets to the big dogs in Bank of Japan, Euro, and now the Fed as well, and undisciplined coordination across the world will not bode well for in the long term. It just can't. Like, am I crazy to say it just can't? Like, you
No,
can't have all this debt. Like, or are we wrong? Are we just wrong? Is MMT the future?
I agree. I don't think money can be printed in infinite amounts without ultimately resulting in inflation. It just doesn't stand to reason. And it goes back to the comment you made, before, which is also the popular meme now, which is, if we can print infinite money, why have taxes? And the answer is, well, then we shouldn't have taxes. We should just print infinite money. And of course, we know that that's not true. It doesn't work out. So yeah, I am very bullish. I am quite optimistic on Bitcoin. I wrote it in the book, and I continue to say today that it is not only the most attractive and asymmetric investment opportunity I've seen in my 17-year career, but I think it's likely the best one I'll ever see in my career, depending on how long I live, I guess. But yeah, it's very attractive. And again, we've been talking through the investment lens, but all the other geopolitical and authoritarian and freedom limiting things that are going on throughout the world, all those roads point to Bitcoin adoption.
I completely agree. Before we wrap up here, one question I had in my head earlier, I forgot to ask: how are you moving into Bitcoin for your clients? What products are you using specifically?
Yeah. So I don't like to, get specific and, shill particular products. I think people know that I'll speak generally. So there is one product today that you can buy in your brokerage account. That's ticker GBTC. That's the Bitcoin Trust. The downside of buying that is you're paying a premium to net asset value, right? So you got to pay $1.20 for $1 worth of Bitcoin. That's one downside. The other downside, obviously, is it's custodied. It's a third party. So that's one product. There are also limited partnership structures. There's a few of them out there, which are basically hedge fund structures where you don't have to pay a premium and you buy basically at net asset value. Oh, by the way, the downside with all these investment products, of course, also is there's management fees. I mean, you're paying someone basically to hold your Bitcoin. Another thing that I'm working on is actually for Swan, which is an institutional option, for dollar cost averaging, basically auto stacking Bitcoin over time on a weekly basis or even a daily basis. And, that's a product we're working on. It doesn't exist yet, but I think I know there are also others in the marketplace that are working with other exchanges and custodians basically to try to launch products for investment purposes. This is obviously, separate and discrete from holding your own keys. I tell my clients, I tell everyone, try to learn about holding your own keys, get comfortable, experiment with small amounts of money, basically raise your game continuously, right? And try to custody yourself. And so that's the long-term goal. But yeah, in the meantime, anyone who's trusting a third party with their investment strategy and their portfolio management, these are some of the options, that are either available today or likely to be available in the future. I think eventually we'll get an ETF, but man, who knows when that happens? Could be a while.
Not holding my breath for the ETF.
Yeah, I'm not either.
Nor am I particularly excited by it. Like I'd be interested to see if like a product emerges where like something like Unchained spreading further, where you can engage like a multi-sig quorum with your money manager and sort of have at least some custody of the Bitcoin.
Yep. I'm actually aware
I'm
aware of one provider that's already doing this, who I just met recently. So and they're doing it, multi-asset. So I'm not gonna shill them directly, but what you're describing is starting to happen, and it's an interesting, when you think about the future of Bitcoin, where can this go? It's an issue, right? I mean, the more third party, I know you talk about this. I know Matt Odell talks about this. The more third party custody, especially concentrated third party custody, and I'm not going to name names here, there is of those Bitcoins, the worse it is, right? And so in the ultimate maturation of Bitcoin, I am hopeful that more people are running nodes, more people are managing their own wallets, that more people have what you say, multi-sig or sharded, deep cold storage Bitcoins. I think there may be a transition period before we reach there. Sort of like there's been a transition period, with mining, right? It got actually more concentrated for a while. You're doing, I think, your part to develop the onshore, mining industry, which I think is actually really important for the long term of Bitcoin, is distributing that hash power more broadly throughout the world. So, yeah, in the short term, this stuff could concentrate. It could go counter to decentralization, and it's gonna take effort, basically, by people to educate people or educate holders to then take it into their own hands, take possession of the keys, and that's the goal. That's the long term. It may take a while.
No, I agree, and I harp on this every once in a while too. Santiago Siri, when he was on here, the first or second or third episode, made a really good point of like when cities got industrial plumbing for the first time, people had to learn how to wash their hands and wipe their asses and take showers. That's sort of what we have to do here now that public key cryptography in the form of Bitcoin is going to go mainstream. People need to learn how to control their keys and secure their keys.
Yeah.
It's just going to take time, and I'm confident. The UX has improved drastically since I've been paying attention and using Bitcoin just in the 7 years alone. So I think moving forward, that trend will continue. I'm not too worried about that.
I agree completely. I mean, as long as cryptography, well, let me frame it differently. We need cryptography, to preserve basic human freedoms. And the way things have gone with the internet, if private key management does not become a core life skill in the next decade, then we'll have a problem. Whether it's related, to holding Bitcoins, or, basically controlling private information that, we selectively choose to release to other people and the internet and the wider world. We have to figure this out. This is a civilizational requirement, for continuing on basically as a species, and not slipping into a darker type of scenario.
I completely agree. And again, I'm more optimistic than most, and I think we will rise to the occasion and the need to figure this stuff out. We're the most adaptive animal to ever live on this planet. I don't see why we wouldn't adapt to this as well.
Yeah, I agree. And thankfully, Satoshi gave us an instrument that wraps human greed and number go up and provides this incentive to learn how to manage a private key. And hopefully that doesn't get co-opted by third parties. And I, like you, am optimistic that in the long run it won't be, and that people will become more self-sovereign. And so yeah, we just have to do our little part to help people learn how to do it.
Yeah, well, thank you for doing your part on the front lines, writing books, educating investors, building products to help people invest via the IRA. That's what you're working on at Swan, correct?
Yep. Yeah, exactly. I mean, whether it's IRA format, or taxable format, or both, is exactly could be both directions.
Bang, bang. We'll have to talk more about that product specifically at some point in the future. Do you have any parting notes for the freaks out there before we wrap up?
Yeah, no, this has been a blast, Marty. I really appreciate it. I'll do the usual shills. The book is Why Buy Bitcoin? Investing Today in the Money of Tomorrow. It's meant to be, the thing that you can hand to someone that is maybe curious and maybe knows a little but not much. And obviously, it's how Bitcoin works and the investment thesis and the risks, but it's also peppered with some fun anecdotes from my times at Goldman and working in finance. And it's available on Amazon and Apple and Barnes and Noble. And Amazon's the primary channel, but you can find it a bunch of places. Follow me on Twitter. It's Edstrom Andrew. It's my handle. Swan Bitcoin. Check it out. swanbitcoin.com/Andy. You can get $10 free Bitcoin for signing up, and signing up is super easy. It takes less than 5 minutes. And then my firm, which does wealth management, we both, invest for people, and we provide them financial advice and do financial planning. And that website is westcapgroup.com. And I'll give the disclaimer that I should have given at the beginning, which is, none of this is investment advice. These opinions are my own, not those of my employer or anyone else. And do your own research and, all that good stuff.
Do your own research. Don't trust us freaks. Verify what we're talking about.
That's right. Don't trust, do verify. But do subscribe to the Bent and keep learning. I'm learning every day, man. I've learned from you. I've learned from others in the space. I'm hoping to give back a little bit, and but we're all learning every day.
Yes, we are. Never stop learning. That's the beauty of Bitcoin. It forces you to learn.
Yeah, man.
Someday
I hope to be a black belt and understand it down to the protocol level and the code. Something to aspire to. I'm nowhere close. I'm just a finance guy trying to wrap my head around it. But
yeah, and I mean the protocol stuff's getting, especially with Lightning thrown in now too. It's hard for me to even keep. I mean, not that I'm an expert on the protocol at any means, but I like to think I have a good grasp on it, but I'm finding it with everything that's going on, still hard to catch up, which may be a good thing. It means a lot of things are going on. A lot of people are working on things.
Yeah, man. Even working full time in the space, which I don't, but even working full time in the space, it's hard to catch up, or stay abreast, which is cause for hope. I mean, that's a good sign. There's so many, thousands of people way smarter than me who are working to build this thing, and that's gonna be one of the things that carries it to success.
I completely agree. Well, keep crushing it. Keep doing what you're doing. Thank you again for coming on. I really thoroughly enjoyed this conversation. I think the freaks are gonna love it too.
Thank you, Marty. I really appreciate it, and it's been a blast.
All right, that's all we got today, freaks. Peace and love. Yeah.